Hello everyone. First off, happy Labor Day. By the way, this image I created with AI. I asked it to generate a image for Labor Day with a stock market trading theme. That's what it came up with. And again, hope everyone had a wonderful 3-day weekend. It is Monday, September 2nd, Labor Day, and this is a detailed technical analysis review of the markets and our trading systems. Again, my name is Matthew Frailey, founder of BreakpointTrades.com. Founded it in 2003, 21 years ago, to provide advanced technical analysis, market commentary, trade ideas, and my passion, which is mechanical trading systems, such as our 21 SPY and ES mean reversion systems, and of course our amazing KISS systems, which you see right here. They're trend following. They've been kicking ass for the last 16, 17 months. You can see on Friday, new smart trailing stops on all these instruments. UPRO trade, system trade, for example, is already up 16% since the system went back long on August 9th. We have the weekly versions. We have the high performance, which have been live now for a couple weeks. Even the weekly KISS system, kind of like a paint dry. They hold much longer, but look at some of these gains here. Nvidia KISS system trade is up 766%. It went long back on October 28th, 2022. You can see Meta is up 249%. It went long on January 27th, 2023. Okay, let's get back to this market newsletter at hand. Again, I hope everyone had a wonderful weekend. And I'm going to go ahead and get this recorder started. If you happen to be new to Breakpoint Trades, by the way, these weekend newsletters are quite comprehensive, tend to be anywhere from 40 minutes to an hour. So very detailed. It's not for the short attention span folks. It's for folks who want to learn how to trade, who want awesome analysis, trade ideas, etc. Okay, let's get this recording started. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone had a wonderful 3-day weekend. It is Monday afternoon, September 2nd, 2024. And this is my weekend newsletter review. It is actually Monday. As you know, the U.S. markets are closed on Monday. It is Labor Day. So again, hopefully you all had a great weekend and enjoying your time off. This weekend newsletter is divided into 6 major sections. A lot of charts here tonight, guys. Probably going to take us close to an hour to cover everything. Same general theme as I always keep. We discuss the opening thoughts on the market. Then we move into some admin comments, such as our KISS systems. You know, the high performance systems have been live. By the way, in about a week or so, we're going to lock that down. That's been free for about 17 months, so we're going to lock that down to a subscription service. We've always meant to charge for that. Okay, so shouldn't be anything new. We are given a 20% coupon for that. I am hoping to do another video later today on the KISS systems. Also, then we'll move back to the general market analysis. Again, we look at all the major indexes. We do a top-down approach from the monthly, weekly, daily, intraday time frames. We also look at some indicators. We review a select view of market sectors. We'll look at currencies, US dollar. We'll look at crypto, we'll look at commodities, precious metals, GDX. And finally, I follow up on some trade ideas. We've had some nice ideas lately, and I added a bunch of new ones this week. You can see I added about 10 new ideas. These are all actionable, long ideas. Couple things. Remember, Steve Nelson's been in Europe. He should be back this week, hopefully. I'm about ready for a break. KISS systems, as you know, they're live now, the high performance. So make sure you went in there and set some favorites. We will be launching that subscription service soon. And as far as the market, like I said, long term, uptrend. Intermediate term, uptrend. Short term, uptrend as well. We were favoring that pullback in August as a wave 4, and that looks like that was the right call. We're now just a stone throw away from new highs on the S&P. Okay. This week we got a lot of news. The big one, of course, is the jobs report on Friday. But there's a lot of news here. I'm not going to read all that. And US dollar, pretty big bounce last week off that 2023 support double bottom. That's causing some pullback in the precious metal area in particular. All that was down for the week. Gold down 0.75%, silver down 2.3%, GDX down 1.8%. That area may need a rest finally. The commodities were kind of mixed. We saw weakness in the energy area, crude oil, natural gas, but strength in some of the ags like agriculture, corn, and wheat. Okay, let's go ahead and get started here. So before we get into the general market analysis, let's talk about some admin things. First off, one of our systems. This is the ES breakout system. I list it with the mean reversion systems. Technically, it's not really a mean reversion system, but I group it with those. And the KISS system, or the breakout system, has been long on ES futures for a couple weeks now. You can see where it went long up there. No changes. It's still been long this whole time. That sideways movement we had in the market hasn't stopped out. Nice move up on Friday. So we'll see. The stop is still fairly wide on this. It's just below this ATR. But should we get a further move up this week, hopefully, then we'll start seeing the stops raise. And of course, once that happens, I'll email all the subscribers, let them know where the new smart trailing stop is. Okay. You can see the list of trades this year for the mean reversion. Been 21 trades so far. You can see the current open trade. And you can see otherwise the mean reversion systems have done very well. This is on MES futures. We like to trade the micro contract. And we also run this on SPY. The breakout never triggered on the SPY ETF. All the other mean reversion systems are flat. Not surprising. Remember, they buy pullbacks like the pullback we had there in August. They all caught that pullback and made money on that. But when the market's uptrending like this, the mean reversion systems are usually inactive. KISS systems, of course, have been long this uptrend, and the breakout has been long here. Next, let's move to the KISS systems. So image number 3 shows an image from the KISS systems. This is just the standard. This is the daily. There's 750 instruments that we follow. Remember, we have these all grouped into these various baskets. You can see the BPT basket here. And on Friday, all these had new smart trailing stops. UPRO, SSO, SPY, GLD, S&P 500 cash. And you can see the UPRO trade there is up 16% already from the August 9th entry. The previous trade, it made 21.5%. So if you just did those trades this year, you've done very damn well. Okay, you can see SSO is up about 10.75%. SPY's up 5.5%. Okay, that's the 2-time and the 3-time leveraged ETFs. Okay, nice trades here. Again, we have all these various baskets here. Remember, you have your favorites. You have all these other things from the NASDAQ 100 stocks, a bunch of ETFs, all the Dow stocks, etc. Image number 4, here's that UPRO, and this is just the standard daily KISS. You can see it's done very well. That system made nice money on the last trade. And actually before that. So right now we have 3 nice big winning trades in a row in UPRO. Again, you can see the current one's up about 16.2% from this entry. Again, it didn't catch the bottom. It didn't get out at the highs, but it did its job. It got out back there in mid-July, right? It then got back in lower than where it got out. That's what you want for a system, right? Back here, the system went long back in October of last year, 2023. Got out in April. It then went back long in May, similar to where it got out of, which is fine. System righted itself, went back long. So it's really done an awesome job here. Current smart trailing stop, 73.8. Next, image number 5. This shows you the weekly KISS systems, okay? So you can see the ones that had new smart trailing stops last week. But the weekly, again, just like you think, guys, the weekly is just like the daily. It's the same settings, but it's on weekly charts, so they're going to hold much longer. Yes, they may not get in it as good a prices sometimes or get out as good prices, but they're going to stay, in a trend for a longer period of time. So they can be a fit for those of you who don't trade that much. But you can see heck of gains here. Look at these gains. Nvidia's up 766%. System would have went long back on October 28th, 2022. So it's approaching 2 years that it's been long. Okay. Meta, it's up almost 250%. It went long on January 27th, 2023. So a year and a half ago. You can see really nice gains here. AVGO up 193%. Apple up 25%. UPRO up 71%. System went long on November 24th of last year. Heck of a trade. Chart 6, here's the Nvidia weekly KISS. You can see where it went long back in 2022, way back there. Okay, you can see how it just methodically raised that stop all those times. In fact, it's raised its stop on the weekly 35 times. So it's been 35 smart trailing stops, just moving along, and it's still long here. There's the current price. Here's chart 7. Here's the Meta weekly KISS system. You can see where it went long back there in January 2023. Okay. Been long this whole time, raising that stop, keeping it wide enough not to get stopped out on noise, and it's up beautifully. Finally, here's image number 8. Remember the high performance KISS systems. There's about 37 different systems here, and there are multiple systems, like for the same instrument, different time frames. Like on the Qs, you can see there's a daily, 78-minute, half day. Okay, you just have to decide which ones you're going to do, or you can actually do the combination. You could take money and split it up among those three. And let's say you did all three triple Q systems. You could take it, put 1/3 into each. Okay, my suggestion here, guys, though, is if you start trading these high performance systems, I wouldn't try to do all of them here. You're going to be overwhelmed with the amount of new entries and new stops that you got to adjust daily. I would suggest starting out with maybe 2 to 5, and when you get good at handling that, you can up it. Remember, you got to set favorites to receive email notifications. But again, my suggestion would be not to set everything here as favorites. Select a few that you like, and then you can add more over time. By the way, guys, real early preliminary, we actually are investigating a service where we could do auto trading through here. They support about a dozen different brokers. How it works is we send them our signals, our trade signals, and they would execute those signals in your account. That said, don't get too excited. It's not something we're anywhere close to doing right now, maybe in the future, but it is a possibility we can eventually offer that, where you can get auto trading, so you can get all these traded in your account automatically. Okay, so that's pretty exciting. And enough of that. Let's move back to the general market newsletter. So image number 9 shows the index sector table, what transpired, of course, on Friday and for the week. Friday ended up being a nice rally day. You can see everything was up nicely for the major indexes, anywhere up from 0.5% to 1.3%. Tech's leading a little bit. For the week, we saw bifurcation. Strength in the Dow, almost up 1%. S&P up 0.25%, while we saw weakness in the big cap area, big cap tech, NASDAQ, and Russell. As far as the 21 market sectors here, the majority were up. There were some down sectors. Weakness in the energy area, primarily semiconductors. Like I said, some of the big cap tech, home builders. Otherwise, everything else here up nicely. Banks and financials have really been rallying lately, anticipating that Fed rate cut. And as far as the currencies, US dollar up 1.1%. So that's a big week. Remember, the dollar was absolutely taken to the woodshed, got very oversold, rallied off a double bottom support. So not surprising to see that. Okay, that's causing some weakness in the precious metals, which I'll get to. Bitcoin was down 8.25% for the week. So that remains weak. Commodities here, some bifurcation. What we primarily see is weakness here in the energy area. Crude oil, natural gas, uranium. Some strength here in the ags. Wheat up 4.4%, corn up 2.5%, agriculture up 0.8%. And precious metals all to the downside here, especially the stocks. Not surprising with that big rally in the dollar. And the bond market here, continue to see movement up in the 10-year and 30-year treasury yields as we continue to see a move down in bonds. By the way, the yield curve, guys, is now at 1. That is something concerning to me. Next. Image number 10 shows the economic news calendar for this week. Tomorrow, the 3rd, we have S&P manufacturing PMI, ISM manufacturing index. Again, tons of news here, guys. Fed beige book the next day. Of course, the big news item for the week will be the non-farm job pay report on Friday, when we are through most of the stock earnings. All right, let's move on to the charts. So the first chart below, item number 11, is Nvidia. As you know, Nvidia, we had those highly anticipated earnings last Wednesday, and the stock sold off. But it came into this demand zone, which I've had here in place ahead of time. So that's a potential support, as well as this 20-day moving average. With a trigger, this could be a lower risk area to take a shot at along with a tight stop, okay, somewhere in the demand zone. Notice you got your moving average ribbon is bullishly stacked. You're getting your first pinch squeeze. Obviously, a beautiful rally off that demand zone on that August 5th bottom. That was the area to buy, that ABC pullback. But right now, let's see if this demand zone can hold. Next, chart number 12, here's Dollar General. Boy, this has had an earnings catastrophe. So this is a monthly chart going back to 2011. And last week, this lost 31% on disappointing earnings. You know, it initially bounced off a little demand zone here, formed a lower high early this year, and then boom, it's now back into this demand zone. Goes all the way back to 2018. So buying, holding on some stocks, guys, isn't always great. You know, if you bought and held back here, you've now made no money. See that? Now, this includes any potential dividends. So now if this demand zone fails, there's another one down here back to 2016-17 levels. So we'll see, guys. It is getting quite oversold here, but again, you need a trigger. But definitely an earnings casualty. Next, moving back to the general market analysis, chart number 13. Here's a chart with the 5 key major indexes. This is the weekly chart. The Dow Jones closing at a new all-time high. It's been stronger lately. The S&P is right at the cusp of a new high. It's basically right at those July highs. While the NASDAQ area is still a little ways from those highs. Again, everything nice rally off that August 5th capitulatory bottom. Okay. Chart number 14, here's a monthly chart of the major indexes. Again, remember, we started this secular bull market on the March 2009 bear market bottom, and we've been in this uptrend ever since. Okay. Otherwise, you can see these big, long, hanging man dojis. You know, we've come a long way from that August 5th low. You can see that on those big doji, those big candle wick links. Next, chart number 15. Here's a monthly view of the S&P 500. Again, you can see that long-legged doji there. This is a beautiful chart. It's a system type of chart, guys. Kind of like a paint dry system, all right? Like watching paint dry. But it's very good at catching long-term trends, keeping you out of bear markets, keeping you in long-term uptrends. So again, a lot of good things on here from the MACD, from the RSI. By the way, guys, little tidbit on RSI. 14 RSI has only been oversold on a monthly chart below 30% 6 times within 100 years. So it's a very rare event to get it. Whenever in the future, whenever the RSI 14 eventually gets oversold, whether that's 3 years from now or 5 years from now or 10 years from now, you definitely want to be looking to load the truck up on that. But we'll get back to that. This 20-month moving average is a good guide, but really a great guide here is this simple stochastic 14 length. Okay, this 50% area tends to be the dividing line between bull and bear markets. In bull markets, the stochastic goes above that 50% area, like you see in 1994 there. And on quick corrections in that bull market, it tends to find support at 50%, like you see there in 98. Got close to it and rebounded off of there. And when it falls below 50% there, like you see in 2000, it says it's a bear market, time to get out. Then when it gets back above 50%, you go back in, which it had you go back in 2003. So didn't get you in at the bottom or out at the top, but it helped you avoid maybe 70% of that move down. And you can see stayed in that next bull market, got out when it fell below 50% there in early 2008, around January. So kept you out of that bear market, got you back in early 2009. All those times it tested 50%, so you stayed long. It fell below 50% there in 2022 for the bear market. It was a bit late when it finally crossed, but then it crossed back to the upside in early 2023, and of course we've been uptrending since. So really nice system. Here you could see the uptrend channel. We've been in a secular bull market since the 2009 bottom. Perhaps this upper channel line is a target over time, maybe around 6,000. Next, chart number 16. Here's the original S&P 500 BPT 401k paint dry system. I affectionately called it the paint dry system because it's like watching paint dry. You can see these images here I made on with AI, kind of funny, but I've always thought it was a very clever name for a system, paint dry, and it was actually very popular. And you can see it catches these trends extremely well, keeps you in bull markets, keeps you out of the bear markets. You can see it was long all during the 90s. It was out during the tech bubble crash. It was out during most of 2008. And it's been long most of the time ever since. Okay. This used to be a part of Breakpoint trades. By the way, I'm probably going to go ahead and add this back. So I'm going to add it back to the systems area. That said, guys, remember, it's not really applicable or something technically useful for most of us. Most of us are traders, or we at least like a little bit of action. And this is totally opposite of that. Again, it's like watching paint dry. Many of these signals, it might stay long, sometimes 5 and 7 years. Okay. Usually the average is a couple years. So it's, again, it's for an active trader, this is not something really it's going to be of interest for you. But, it could be interesting, maybe your parents, or you got some older people, or some people, friends, family that don't want to trade, but they want some sort of protection. This could be it. Image number 17. So here's that system back to 1960, early 1960s, and you can see it's done very well. It kept you out of a lot of those 1970s bear markets, you can see, and did well in the 1980s. Actually got out right before the 1987 crash, got back in after the crash, etc. So it's done very well. Next, image number 18. Here's a 100-year chart of the Dow back to 1924. And I actually use this as one of the rules in the paint dry system. So I'm showing here basically the RSI of 13 length has only been oversold below 30% 7 times in the 100 years. So it's a very rare thing to occur. The last time was 2008. So it's been 16 years since that's occurred. Now, why did I use an RSI 13? It's because right here in the 1970s there, the late 70s, 14 just barely was over 30. It was like 30.25 or something, or maybe that was here in the 2000 low. So I made it a 13, so it just dipped a little bit. But anyway, what the paint dry system does is whenever the RSI 14 gets oversold, it doesn't go long based on that. It needs a reversal candle. So like a candle, a strong reversal up candle that takes back 50% of the previous candle, that triggers the system to go long. So for example, let's see if I got one of these here. So here's the 2008 bottom. So RSI was already oversold. You had a big reversal candle there in March, took back more than 50% of that previous down candle. So the system would go long there, put a stop at the low. Now, again, that's not all of its rules. That's just one of the rules if that RSI gets oversold. There's plenty of a bunch of other rules here, but that gives you an idea. All right, let's go and move on. Image number 19, here's the daily view of the major indexes with the Bollinger Bands. Again, we had the August 5th capitulatory bottom, V move up for the first 3 weeks. Last week was mostly consolidation, mainly for the NASDAQ, sideways there, kind of flagging action. S&P as well. The Dow, of course, really never had a correction. It's been making new all-time highs. Moving on to the individual indexes, chart number 20, here's the Dow Jones. Again, perfect textbook ABC correction following the July highs. Remember, ABC three-wave pullbacks and uptrends are bullish. He came down to a support trend line. And we've rallied up, initially pausing at the July highs, now taking it out. Next, chart number 21, here's the S&P weekly chart. Again, we rallied perfectly off that demand zone that we had here in place ahead of time, right off that August 5th capitulatory bottom. We're now a stone throw away from all-time highs. Next, chart number 22, here's the weekly KISS systems. Remember, we have the weekly versions of the KISS systems, which I talked about. They're kind of like paint dry systems, but they're a little more, they're more adaptable, and they trade a little bit more often than the paint dry, but they're kind of like paint dry because they can hold sometimes for 1 or 2 years at a time. These are the weekly on the indexes. They've all been long since, around 2023. No changes here. Smart trailing stops were never hit on that last pullback in August. Next, number 23, here's the daily KISS system for the S&P. That's one of my favorites of this, or one of the high performance intraday systems, but you can see it's done great. Went long on October 31st last year, caught that first good uptrend, went back long in early May, caught that trend. After the ABC pullback into August, it then went long again, about 4 days off the lows. And now we have 3 smart trailing stops, right? You had the first moving average ribbon squeeze I talked about last week. BPTMA hasn't turned back green yet, but remember that first pinch squeeze is usually a buying opportunity. Again, we had a DeMark 9-13 combo. So far, not much of a pullback on that. The previous ones gave us a nice pullback. Again, that pullback in August, from July into August, was a simple 3-wave ABC pullback. That's what triggered the KISS system to go back long. Image number 24, here's the 4 time frames. Daily up here in the upper left. Okay, initially, again, price has been pausing at that resistance cycle, the cyan dots. Let's see if we can bust up through that or not this week. We've held the ATR in the half day and, of course, the 130-minute. Next, number 25, here's just a simple, clean view of the daily S&P 500. Again, over the last week, we've consolidated sideways, holding that 9 EMA on a closing basis, breaking that a little bit on Friday. Now we'll see if we can attack these highs, make a new high early this week. Okay. Again, just like on the Dow, the S&P had a simple 3-wave ABC pullback into August. The bears are trying to count this as some sort of 5-wave downtrend, but guys, it was a simple ABC, and that's what we favored here, so we were correct. Next, chart 26, here's a 60-minute view. Again, it shows you some of this wave count we've had in place. Potential wave 1, 2, 3. That's clearly a wave 3. Remember, wave 3s are trending, very strong momentum. So that's a typical wave 3. And the sideways pullback looks like a wave 4 that we've had in place. We held this little demand zone here, and now we're trying to start in this wave 5. Now, a possibility here would be that wave 1 and 2, and then now we're going to go up in 3 of 5. If that's the case, guys, we should go right to new highs fairly soon. Chart 27, here's a 2-hour view, just showing we held that support zone last week. Now let's see if we can bust out through this little resistance area. Chart 28, here's a 15-minute chart. You can see initially pulling back off resistance zones, bounced off demand zones, and we took out a little supply zone last Friday. Moving on, chart 29, here's the NASDAQ QQQ's weekly view, down 0.78%. So the S&P was up, this was down. Again, it hasn't been as strong as the S&P on this rally. It's still a ways off those highs. We did get a perfect rally off the demand zone, uptrend line, 50-week EMA on August 5th, of course. Chart 30, here's the daily KISS system for the QQQs. Again, system went long, about 4 days off the lows there. Got on much lower than when it got out there in July. You see that? So KISS system's done excellent here. We did get a pullback on that DeMark 9. Okay, just like all those other DeMark 9s gave you pullbacks the last few months. This pullback has kind of a flag look, so let's see if it can start to rally here. Notice the BPTMA Deluxe on the ribbon pinching. That first pinch squeeze is usually a good buying opportunity. Image number 31, here's the 4 time frames. Again, similar look to the S&P. Price has been stalling at this resistance cycle for the last week or so. We're still holding the ATR on the half day there. We have a support cycle on the 130-minute. We're below the ATR in those other time frames, but let's see if we can build upon that. Chart 32, here's just a daily QQQs chart. Again, we pulled off that supply zone after that first big rally off the demand zone off at August 5th. Capitulatory bottom. It's a logical pullback. So far, though, pullback got into that gap a little bit, bouncing. Now let's see if this can build this week. You can see your moving average ribbon. First pinch squeeze. Chart 33, here's a 2-hour view shows us a potential wave 1, 2, 3, and as a potential wave 4 pullback. If that's the case, if wave 4 is in, we should break out of here and go to a new high in a wave 5. You can see the moving average ribbon's really pinching here. Energy is built up, and you can see the little trend line on the RSI 14 that could be acted as a trigger as well. Chart 34, here's a 60-minute view, just shows you the same thing. Okay. You can see how tightly wound the moving average ribbon is. Remember, when the moving average ribbon is tight like this, you're due for a strong move. So if it's to the upside, it could be a pretty nice move. Just like back here when it was pinched and you were in a downtrend, you end up having strong moves to the downside. So hopefully this can resolve to the upside. Chart 35, here's IWM small caps. Again, beautiful rally out the demand zone on the August 5th lows. Pulling back off the supply zone initially. Let's see if we can attack it again this week. And chart 36, here's the 2-hour view. Again, you can see the pulled back off the supply zone. There's a demand zone down here, which technically we didn't get into. I guess if you count this little spike high, you did. Now we'll see if it can attack this week. So that does it for the major indexes, guys. Let's go and move on. Chart 37, here's the VIX. VIX is now bouncing. Now it's pulling back to its 200 moving average again. We'll see if it finds support there again or not, or falls through it. You can see that August 5th VIX, when it spiked to 66, that was your capitulatory bottom. And then when it closed back inside the upper Bollinger Bands, that was your VIX Bollinger Band buy signal. By the way, that's a pretty good mechanical system, that VIX Bollinger Band system. Chart 38, here's the VIX on a 60-minute time frame. So the VIX has been kind of holding this demand zone here. We're back into it. The question is, so if the market rallies to a new high, perhaps we'll see the VIX fill these open gaps below here. The VIX likes to fill these gaps. Okay. Now there is a gap to the upside too, but if we lose the demand zone, there's some gaps below. Chart 39, here's the percentage of stocks in the S&P 500 above their 20-day moving average. Initially pulling off this little overbought area. It's now back to 91.8%. Chart 40, here's the S&P versus high yield corporate, HYG. The two are highly correlated. Look how they move together. But sometimes you get divergences. The last time at the August 5th low, we had a positive divergence. HYG was leading higher while the S&P wasn't. That helped pull the S&P up. Let's move to the bond market. So guys, chart 41, here's the yield curve. Now this concerns me. It closed at 1.0, ratio of 1.0. That means the 10-year and the 2-year are the same price. Okay, you divide them together, you get a ratio of 1. So technically we're not inverted right now. It's been about 790 days, guys. Or actually, sorry, that's been over 800 days. That is the longest in history. Now, typically, guys, this has been the best recession indicator. Usually you get your recessions confirmed sometime after this goes back uninverted. So if this continues higher, goes above 1, I think it pretty much sets in the stage we will have a recession coming down the road. Okay. Again, this is the longest in history. Next, chart 42, here's the 10-year Treasury yield. Bouncing a little bit last week, up 2.7%. The thing is, this ABC that I've had this labeled is ABC, is this completed? Or are we getting a temporary bounce here, we come down again? Either way, down this area down here, I expect to hold. I don't expect us to go below that major support. Chart 43, there's another weekly view, shows that at ABC. There is a larger demand zone below. Should we get another pullback? That said, guys, remember, interest rates are now in a secular bull market. Chart 44, here's the daily view. Clearing the 20-day moving average last week. Again, it's been so oversold here. Not surprised to see a bounce back in this. And chart 45, there's the bigger picture view going back to 1980. Again, remember, the 10-year was in a secular bear market for 40 plus years. That is over. It's now in a secular bull market. Doesn't mean this is going to go straight up, but it means, it ain't going back. Interest rates aren't going back to, near 0% again. This is Not going back down there. The new normal is higher for years now. Okay. That said, again, this is a monthly chart, so it could chop around, do anything for quite a while, but the new normal is higher. Next, chart 46. Here's high yield corporate. Just showing this is the high. We showed high yield corporate above. This is a 60-minute chart. It looks like a bullish ascending triangle. So should this break out, that should support higher prices in the market. Moving on, let's look at some of these market sectors. Chart 47, XLK pulled off that supply zone. Remember from a couple weeks ago, pulling back into this little gap. Now we'll see if this can try to push higher or not. Chart 48, semiconductors, same deal, pulled right off that 50-day moving average, trying to bounce here off the 20 a bit. Those sectors need work. Chart 49, transports continue higher nicely. Again, look at the supply and demand zones. We bounced off the demand zone in August. We pulled back off the supply zone in July. Learn to use these supply and demand zones, guys. Chart 50, XLF financials, up and away. This is a super strong sector. Look at this. Been showing this for a while. We took out that resistance. Been up and away. This is anticipating those rate cuts. Chart 51, consumer staples, also up and away, kind of parabolic. Still don't see any MACD divergence or anything. Looks like it's flagging. Chart 52, healthcare, also kind of in this parabolic uptrend at the moment. So a lot of these non-tech sectors, guys, we've definitely seen some really good rotation in there, whereas tech is lagging, as you've seen. Chart 53, industrials, also making new highs here, just super strong. And here's the weekly view. Now, the weekly, we are setting up into potential big MACD divergence. Again, this may need time to flesh out, but we could eventually end with a divergence. Chart 55, utilities, continue very strong as well. It is potentially wedging though, so keep an eye on that. And chart 56, knee, that's one of those utility longs that we've given, that head and shoulder or that cup and handle pattern. And it's, been working slowly higher, very slow, kind of boring, but your stop would be below that trend line there. We had it as a long idea back here in this coil in July, guys. So, but if it's a cup and handle, it should work higher over time. Chart 57, XLE Energy. So far, trying to bounce off that little uptrend line. Still technically in a overall downtrend. Chart 58, Oil Services. They were down for the week, so they've been weaker. Still holding this coil area, the support demand zone. Chart 59, FXI, Japanese or the Chinese market. That's done well. Nice rally off the demand zone that we had in place well ahead of time. All right, let's move to commodities. Kind of a mixed bag here. Weakness in the energy primarily. DBC, the index down 0.7%, still holding this weekly coil. Chart 61, there's the daily. Again, we had that perfect double bottom support from the December 2023 lows. Here added a little short-term pattern to monitor. Chart 62, crude oil down 1.7% for the week. Over the last month, this lower coil trend line, bulls have been defending it, but can they hold it? We'll see. Moving average ribbon's pretty tightly wound. Chart 63, here's the daily. Again, we've been holding this demand zone, lower trend line, but can bulls hold this? We'll see. We'll likely answer this week. Chart 64, UNG natural gas, basically pulled back, perfect double bottom there. That was an area to try along again with a stop at the lows there, 1270. Now we'll see if this can push higher this week or not. Nice move out of the wedge. And then, I tried it long here again at this double bottom. Chart 65, copper, nice ABC rally. Or nice ABC pullback off the May highs. Nice bounce here. Stalling at that resistance area from the June lows, not surprising. Chart 66, DBA agriculture, up 0.8% for the week. You have a possible completed ABC. If that's the case, this should go to new highs. Beautiful cup and handle break earlier in the year, of course. Chart 67, here's the daily view. And chart 68, here's the monthly view. Monthly potential bull flag. If you could see the initial pullback off the supply zone. If this works out, this may eventually rally to these next supply zones way up here. Good swing trade. Chart 69, corn. Remember, I've been stalking this for a while, this wedge. I redrew it once. So finally had a nice trigger last Tuesday off that tight doji. And finally on Friday, clearing the downtrend line. So if you went long there early in the week, you've done well. First target would be that 50-day moving average, and then you got to decide if you want to take some profits. But nice trade. Chart 70, uranium ETF. You can see the head and shoulder earlier this year that played out. We held that uptrend line from 2020, 200-week moving average. And nice pullback yesterday, though. Not surprised. Kind of had a bear flag look to it. Chart 71, Bitcoin. Got pummeled last week. Now it is up. It is up here today a little bit. I still think that low about a month ago was a wave 4. If that's correct, we should go to new highs in a wave 5 eventually. That said, this individual stocks need a lot of work. Chart 72, here's the daily. So, guys, these counts, again, the bearish view is it simply completed an ABC, and it's going to go all the way down again. Okay. The bullish view, the only thing I could see here would be a nested 1, 2, 1, 2. But for that, you can't go below this 56,100 area. You would cause an overlap. So really, bulls need to rally it from here if that's the correct, if this is a nested 1, 2, 1, 2 in blue. Chart 73, here's Ethereum. Remember, this had an ABC bounce into that resistance area. It is up a little bit here on Monday. Chart 74, US dollar, again, rallied over 1% last week. It is up slightly here today. If this is the correct count, we've been in a wave 3, and maybe we got a wave 4 bounce here that will eventually end. Chart 75, here's the daily. Again, nice rally all last week. We got into this demand zone or support zone from the December 2023 lows. Moving average ribbon was very wide. You had some RSI divergence. So it was set up for a bounce, and that's what we've got. We're now back to the 20 MA. Chart 76, here's the UUP. That's the ETF. Had a wedge look to it, which played out. Moving to precious metals, chart 77, gold. Remember, I've been showing this wedge for a while. Starting to leak oil a little bit with that strong dollar. Again, gold's in a bull market, guys, but the question is, do we get a correction here finally? Chart 78, here's gold on the weekly. Again, pulling back a little bit. It's possible we've put in maybe a wave 3 of 5. If we have, you can see we have some divergence in the MACD and RSI. I would expect a deeper wave 4 pullback. But again, still too early to say if we've done that. But if we start getting a strong correction in gold, that's likely a wave 4. Chart 79, here's the monthly view of gold. Still up 2.2% for the month. But again, to me, this is a wave 3 we've been in. A good wave 4 pull would be a wave 4. You got a demand zone down here. Eventually, I'm expecting new all-time highs in a wave 5. Chart 80, here's silver, pulling back a little bit. Again, I think that last low was a completed ABC, so I don't think silver's going back to that level. I could be wrong, though, but that's a big support down there. Chart 81, here's the monthly view of silver. Remember, we broke this monthly coil early this year. To me, this is a 4-year coil, just gorgeous looking. Initially pulling back off the supply zone from the 2012 lower high. I do think eventually, though, silver is going to work to these upper supply zones over time. It's going to take time, guys. It's a monthly chart. Chart 82, I haven't showed palladium for a long time. It's not been like gold. It's been weak. You can see this was $3,400 back in 2022. It's now $1,000. So it has really had a haircut. That said, you got a little bottoming pattern here to monitor. Here's a way to play it would be PALL. That's the palladium ETF. Same pattern here. If this area comes to life, you definitely have a pretty good area. I mean, shoot, the thing was $300 in 2022. It's now $90. Chart 84, here's platinum. It's been weaker than gold as well, but you're forming a big monthly coil pattern here. All right, moving on to the mining stocks, chart 85, GDX. It's been pulling back here the last couple weeks, consolidating. It's still technically in an uptrend here, but we'll see, guys. Can it make another high here or not? Remains to be the question. Sharper 86, here's the 60-minute view. Now the bullish view would be, this has been a large wave 4 correction. We're going to rally up again in a wave 5. But again, price needs to get going here. It needs to take out this downtrend channel. Sharper 87, here's the BP GDX trading system, the parabolic SAR. This has been on a sell signal though. Remember, this was an overbought territory recently. Finally, guys, the last part of the newsletter, trade ideas. First off, covering some of the recent ideas we've had. Chubb has been on the watch list for a couple weeks, this coil pattern. It is playing out nicely if you've been patient. Congrats if you've been in this. Look at this thing. Nice swing trade over the last week. Sharper 89, here's the 60-minute view. This is the way I like to trade it. Absolute gorgeous coil pattern. Broke out. First rally up, pull back tested the coil trend line, which became support. Just gorgeous, and has been moving up higher since. Sharper 90, Duke Energy, idea given from one of our subscribers, trying to break out a little bit on Friday, volume coming in, very nice pattern. Where would your stop be, guys? Swing stop would be basically maybe Thursday's lows, okay, at the low portion of that coil. Sharper 91, Gurn, also breaking this coil trend line on Friday. We'll see if this can build. I'd put a tight stop maybe below this little lower coil trend line. Sharper 92, PAR, aggressive falling wedge I had last week, triggering a little bit on Friday. Stop should be right at the lows now. Sharper 93, Pro, nice little bottoming pattern. If you bought this last week, still looks okay. Just put a stop in place. Sharper 94, ATEC, another one from last week. Trying to take out some resistance here. Looks okay. Sharper 95, CRDF. Been watching this for a while. We got this little coil pattern. I own a little bit of this, but I need to see this start curling up. Look how tightly wound the moving average ribbon is. I mean, they're right there. They're all together. In fact, the last few days, they're basically right on top of each other. So energy is really bent up here, guys. This is gonna have a sharp move very soon. Sharper 96, Lift, still viable pattern if it could take out this resistance. Mind the 50-day moving average there though. Sharper 97, YUMC, been on list for a while. I still like this pattern. Nice pickup in volume on Friday. If it can clear resistance here, I think it can make it up to these target areas above. Sharper 98, VRCA, little bottoming pattern. Trigger would be taking out Friday's highs, stop at the lows. Here's some new ones. Sharper 99, Intel. Nice pop on Friday. Intel's greatly depressed. You know, maybe it's due for a bounce back for a while. Looks good. Sharper 100, CNC. Resistance is the trend line here. Held that 20-day moving average last week. Sharper 101, COHR, bull flag pattern. Needs to clear over the downtrend line. Sharper 102, AKAM, little ascending triangle. Resistance 103. Sharper 103, APLT, nice coil setting up here. Resistance 655. Sharper 104, AAOI, nice bottoming pattern. Nice pickup in volume here, taking out a trend line on Friday. First target would be that boxed area above. Sharper 105, LABU, that's the triple long ETF for the biotech area. Looks pretty decent here. Target would be up here, that supply zone. Sharper 106, GPN, global payments, resistance 112.12. Okay, target area would be up at that supply zone. Sharper 107, APH, kind of a flag pattern. Target would be up there. Sharper 108, BBAI, kind of a bull flag setting up here, low price stock. Sharper 109, ABUS, nice little pattern here, good volume on Friday. Resistance 394. And the final chart, chart 110, AKBA. Long idea if it can clear this resistance zone. I know that's a lot of long ideas, guys, but I wanted to make a bunch for this whole week, okay? Remember, these long ideas are generally good for at least a couple weeks, so that's why we like to throw out a bunch of them here on a month, on this weekend type newsletter. Anyway, guys, we'll see where futures here open shortly. Again, I thank you for all your support. And if you're on YouTube, please subscribe if you haven't done so. Please like, comment, and please subscribe to our website if you're not a subscriber. Really helps us out. Again, appreciate all the support. Take care, everyone.